Well, hello, everyone. Thank you for joining us today for our Silicon Heartland series. And today we have Helon joining us from Rev1 Ventures in Columbus. Hello, Ryan. How are you today?
Hi, Rebecca. Well, thanks for having me.
Yeah, no problem. So Rev1 Ventures right there in the heart of Columbus, in midpoint of the whole Heartland. So we're going to hear about how Columbus is becoming a boom town. I was just there last week, so I got to see it personally. Okay, so a little bit about our show. If you haven't joined us before, this is our Silicon Heartland series. We have held about more than 50 shows globally since we started in April 2020 during COVID, during the beginning of COVID. So we've had more than 50 from around the world in all the leading tech hubs. And so this is our Heartland series, which we started this fall, which syncs up with my new book, Silicon Heartland, which is coming out very soon. So you can see here, we've had Indianapolis, Pittsburgh, Cleveland, now this week, Columbus. Next week is Tulsa with a Tinto Capital. Then we go to West Virginia to Morgantown with Mountain State Capital, and finally Centrifuge from Cincinnati. And that wraps it up pretty much for the year, except that we do have two special VIP events, in-person events, one in New York on December 8 and one in San Francisco on November 9. So please email me if you're interested in either one of those. Those are really for our Circle members. So you probably already received an invite if you're a Circle member, but let me carry on without further ado. When we talk about the Heartland, this is how I define the Heartland. This is where I went on my Silicon Heartland tour all throughout these former Rust Belt industrial towns. Although Columbus is not really an industrial, never really was an industrial town. Actually, we used to call it a cow town because I grew up nearby Columbus in Lancaster. And you can see right here how close Lancaster is to Columbus. And right in here, right around in here is where the new Intel site is going up. So I toured all these places and did, well, close to 200 interviews during COVID, and it was great. Everyone was available. No one was traveling like they are now. And I did all that in my Honda Element, which you can see right here. That's the end of the road tour, which I ended up in Boston near my publishers, at my publisher's office. Okay, that's a little bit about what I've been up to, and there, right, you can see here the Intel site in outside of Columbus and 30 miles from my hometown of Lancaster. Okay, so if you don't know much about me, I'm an author and a journalist. I write for CNBC. Silicon Heartland is my fourth book, and you can check out the other titles right there, including my video that's on YouTube, and you can hear a lot more about the content there. Okay, so finally, I'm going to get to the main stage today, which is Ryan and Rev1 Ventures. I put together a handy dandy chart here so you can see all about what Rev1 Ventures is doing today, and it's pretty impressive. Ryan, I think 4 primary funds, $130 million under management. You're doing seed and pre-seed investing in tech startups. Several women-led startups, 75 active portfolio companies, and broad sectors of investing, enterprise software, life sciences, energy, these kind of big picture kind of issues. Now, Rev1 Ventures is a venture development organization. So Ryan, could you explain what is meant by a venture development organization?
Yeah, happy to. And again, thanks again, Rebecca, for having me. So in Rev1, there's a lot of different terms around what we do. Venture development is an industry segment, in the U.S. economy, focusing on organizations that help support tech-based economic development. Rev1, we actually describe ourselves more specifically as a startup studio and fund management company. So what that means is we work with and invest in high-tech, high-growth startups. And as you note there, we are an active investor. Our capital is organized across a dozen different investment vehicles, 4 of which you correctly note are actively investing right now. And we've amassed a pretty large number of portfolio companies across those different funds. But we work with entrepreneurs, in the Central Ohio community, helping advise them on their high-tech, high-growth startups. We work with the Ohio State University and Nationwide Children's Hospital and the scientists and inventors at their research institutes to help those institutions commercialize technologies that are developed within, those organizations. We work with corporations to help with their innovation programs. And we don't provide, general management consulting. Rather, we really focus on helping organizations understand what's happening in the startup world and how do they understand changes in the emergence of new technologies and how to connect with and partner effectively with startups. Mm-hmm. And then the last piece I'll mention, because I could go on and I'm looking forward to going on a little further over the course of our discussion, we have a 60,000 square foot innovation center here in Columbus, Ohio, where we have manufacturing space, laboratory space, office and co-working space that startups can avail themselves of and really benefit from the density and the innovation that brings just with the formal and informal networking that comes about when you have a lot of really smart and interesting people working on, new technologies together, in a common sort of location.
Yeah, I remember it's a very big space. I visited it as part of my Heartland tour and doing research for the book. Very impressive. And it's near OSU as well.
Yes, correct. A lot of our work is connected to the Ohio State University. We do certainly a lot of things that extend beyond that relationship, but the office I'm in now is right on the OSU campus area, across the street from the law school and down the road from the commercialization office for the university. And the center, the Innovation Center, which is over on the west campus of the university, is Ohio State property. And, we lease that and then manage that Innovation Center as part of Rev1's operations.
All right. Yeah, I remember seeing the new Rev1 Ventures office right very close it's on High Street, right in the middle of Columbus there, across from OSU. And that's pretty new. I think that's great that you're right next to all this innovation that's happening, that's spinning out of OSU. So let me just also say a little bit about Ryan. So everyone can warm up your questions for Ryan and make them very relevant to the topic that we're discussing today. He's the EVP of investment funds at Rev1 Ventures, and he serves on the board of at least 5 and maybe more. How many is it?
About 5 currently.
Okay, I counted up 5. Okay. You joined Rev1 in 2012. And before that, very interesting career. You can tell us a little bit more about the Cooperative Business Council, what that was like. And also you were at Nationwide. Of course, we know Nationwide in Columbus. You can't miss the big tower there, and it's right next to the convention center, or part of the convention center now. He's through and through OSU. So great. Anyhow, why don't we see if there are any questions to start us off with. And let's see, I'm going to look at the chat here. Okay, Hal Kelman wants to know, he's here in Silicon Valley, and he wants to know, is anything going on at the Intel site now? I heard it was only a photo op. Well, Hal, you saw my photo, didn't you?
Yeah, I think they're gearing up, for groundbreaking and beginning construction in earnest. I believe I read the first chips are slated to be produced in 2025. So given the scale of, a $20 billion capital investment, that actually is extremely impressive to me. But there's certainly just a lot of, I think, formation and foundational, work that's happening. I'm particularly excited. The capital investment, the significant construction effort, the economic stimulus, both the construction and ultimate operational bring is just a massive scale. And I still just sort of fathom at the scale of it. But I'm also really intrigued by, Intel's commitment to put $100 million into some of the workforce development aspects that will be required to support, the training and creating the workforce that will be, necessary for the successful launch and scaling up of a operation of that size. And, the breadth of the impact, I think I read 169 suppliers, already in Ohio, and that's surely to grow both in number and scale of kind of the support operations and supply chain, that'll support a factory of that scale. and the density of just very smart people with this expertise in semiconductors being concentrated in our region like never before. And what that means in terms of, startup companies and formation. We do a lot in enterprise software and enterprise technologies. Today, we've certainly looked at various hardware technologies over the years, and we, do invest on a select basis in hardware. But I think this is going to really create just an additional wave of new types of semiconductor hardware related technologies that we and other investors will probably find very compelling as investment opportunities.
Right. Yeah, it's going to transform the region for sure. And I noted that being in Columbus last week, there already is a lot of traffic and it's only going to get busier and busier and more developed. So is Columbus ready for all that?
Well, I hope so. I'm lucky to know some of the folks in our economic development organizations, One Columbus, Jobs Ohio, and they're very bright and talented people, and I know they're laying the foundation for all that to work successfully. But certainly the housing required, the infrastructure required broadly, the water required to operate a semiconductor fab, it's just breathtaking on multiple levels. And I think the planning and the work that's going to go into that is substantial, but I feel confident that Columbus and Ohio are very much up for the opportunity and challenge, and that we'll successfully pull it off.
Well, it was a very competitive bid, wasn't it?
Yes, from what I understand. So in our role at Rev1, we weren't directly involved in the recruitment. Right. Certainly, we like to think of ourselves as an important asset in the region that an organization like Intel could say it's good to have. These types of entities, different venture capital, venture development support organizations in the region, because it makes for a very vibrant economy that I think you'd want is the backdrop, for undertaking, an investment like what Intel is doing. So that's the nature of sort of how we're involved. And I think we'll certainly, like the whole region, will be a beneficiary of what is going to be brought, by this massive investment.
Well, is Rev1 involved in some of the training as well for the engineering types, the technical types that are needed for an operation like this, and the suppliers that are coming on board as well?
Well, it's interesting. We are involved in some of the workforce development from a couple different angles. One, our innovation center houses a coding boot camp tech elevator. So that is doing workforce development. That's a tenant partner organization. A number of our startups, hire and have hired graduates from that boot camp. We also are an investor in an organization called Color Coded Labs. It's another coding boot camp focused on diverse women, folks that want to develop coding skills to advance, their careers. So we're touching workforce development in certain ways, and certainly we're promoting, the development of, the tech-based economy, creating jobs that then, creates recruitment opportunities for talent in our region. We also run a really cool internship program that some of my colleagues have built over the last couple of years, where we're placing recent college grads, graduate students, postdocs with startups on a program that both provides sort of a linkage of those graduates to startups, as well as some economic benefit, for startups to hire these graduates as interns. And we've seen a number of really cool success stories where those folks have gone on to become full-time hires with those organizations with whom they've interned, or have gone on to join another startup after they've completed their studies. So those are the ways kind of we're touching some of the workforce development aspects that I think will bode very well for, again, Ohio rising to the opportunity, to provide, talent to Intel as they scale this up.
Right. Here's a question from a startup founder here in Columbus. Wants to know what kinds of things you look for when you're evaluating companies during your intake process. Anything specific to seed stage startups?
Sure. So one, we are focused on, Central Ohio as the primary geography in which we invest. So we have some kind of basic qualifications around geography, the sectors. We're focused on high tech, high growth. Our studio serves entrepreneurs across a fairly broad variety of high tech, high growth sectors. Our funds have some greater degree of specialization in terms of where they invest. And then we're really focused on, pre-seed to early stage, companies. And that means they are getting launched. They've developed their product concept. They are doing market validation. And that's sort of the phase typically where we get involved. And we have some both programming and process and ways of advising entrepreneurs on securing kind of market validation and exploring that aspect of their business, because we really think, kind of the foundational efforts around developing a startup are both kind of the product definition and what makes for a differentiated, product that solves a problem in the market, and then validating that by actually talking to prospective customers and getting that very early market feedback, before you go down the road and start making substantial investments in product development, really making sure that your product definition is meeting a market need that can be validated, and you can have that positive signal on the basis of which to then seek to start, actually investing in building the product and team.
Right. One of the issues that came up during the Comeback Capital Conference last week in Columbus was the issue of coastal money coming into the Heartland to support the growing number of startups in the region. Are you starting to see that in Columbus yet? We
are, yes. In fact, each year, I think, builds upon the previous year in terms of the number of different new firms we're attracting from different parts of the country to both, one, look for deal flow in Columbus, and then actually to, make investments here as well. So, each year it's very exciting when our companies are raising new rounds, when we're leading them, our assistance in doing outreach and helping with the syndication efforts, or when they're out raising money for later stage rounds and, really traveling around and meeting investors, the number of investors now that are taking interest. And then the inbound interest we get, given our role, investing in pre-seed, to early stage companies, it's been fun to connect with a number of growth equity firms across the country that are actively looking for deal flow, outside of the coast. And they perceive there to be opportunities here that are maybe less well known, maybe aren't as competitive in terms of, they don't have 20 investors flocking around them just yet in terms of wanting to provide that next round of capital, or maybe those companies aren't even looking for capital yet. But with sort of the idea, they could say, I would invest in these new market segments for my product, or I would, accelerate my product roadmap, this much faster, to grow at a more accelerated rate. So it's been interesting too to see both the outward, kind of push and outreach of the startups to investors, but then also seeing the investors come and really, because of some of the exciting things that have happened over the last several years in our region, having much more interest in, hey, I need to really figure out how Ohio, how Columbus fit into my sourcing strategy, and how I proactively get in front of that by networking with folks like Rev1 to really see these companies, watch them develop, build relationships with the teams, so then they're well positioned to provide that next round of capital.
Yes, I have seen Tiger Global investing in the Heartland, and also Sequoia a few deals, and Graycroft's a few deals. It's been a scattering of VCs from the coast, but I think it could pick up as you see more success stories from the Heartland. And there are a few, and Cover My Meds is one of the big triumphant stories from Ohio. What about at Rev1 Ventures? What's your trophy company so far?
Well, I don't know. I would never just pick just one. But no, we've been fortunate. We've had north of 20, positive exits over the last 7-8 years or so. So that's nice to see that part of the track record develop. But really kind of each milestone that we help one of our portfolio companies achieve, new customers, revenue growth, building out their team, raising that next round of capital, those are all, really exciting, milestones. When we spoke, in preparation for this, I said, boy, I think it'd be fun to highlight some of our, successful women-led companies.
Yeah.
So a few of those, if you don't mind, I'll mention,
Sure.
For the discussion. So one company, Script Drop, was actually just at their board meeting yesterday. This is a company that's involved with prescription drug delivery and medication adherence. So pretty important, big challenges, getting medication to patients that need them and helping them get on the medication and take it properly. Company is led by Amanda Epp, who is a Cover My Meds alum. So one of those kind of first major success stories, in the Midwest on the healthcare IT side. And now Amanda's, taken her talent and skill and experience to Script Drop and building this company. They hit an awesome milestone this year. They've now delivered over 9 million prescriptions to patients, which is just a breathtaking number over their 5-year life. And the company's just growing really rapidly. And also all these companies, rapid growth is so important, but you also need to focus on unit economics, the fundamentals of the business, making sure, the gross margin, the cost structure, et cetera, all line up with a business that can be viable for the long term. And I think Amanda's impact is both on the growth side and developing a great strategy, but also on the operational acumen side, and really zeroing in on, building a business that has very strong fundamentals. So she's a great example of a woman leader who's taken a company, now onto, a growth stage of development. Another company I'll highlight is called StrongSuit. This is led by a woman, Lindsay Michaelides. She's a former management consultant and healthcare strategy executive. StrongSuit's a future of work company. It provides a tech-enabled concierge service for professional parents. And the way she has structured her go-to-market is really positioning this as an employer-provided benefit. So you have, successful executives, they're at this accelerating stage of their career, but they may also have families and all of that responsibility outside of the workplace. And this is basically providing a benefit to help them manage that personal side of their life that's extremely important while still being able to devote what a high-powered, demanding job, requires of an executive. So Lindsay, great origin story for the company, had this problem, was on a task force at McKinsey around retaining, women management consultants as they, developed in their careers. And she took that kernel then to ultimately start this company. And now it's on a really nice growth trajectory. We are excited to be an investor in this one as well and see kind of where it goes next.
Right. And I know that one has money from Bloomberg Beta as well, from the West Coast.
Exactly. And these two are also good examples because they highlight thematically some of the things Rev1 is interested: healthcare, IT, digital health on the Script Drop side, and then, future of work, HR tech on the StrongSuit side.
Okay.
And then last one I'll mention, if I may, is a company called Sure Impact. And this is a vertical software as a service company focused on the nonprofit and foundation space. Founded by Sherry Cheney Jones, who's a really successful nonprofit consulting leader. And she saw this challenge with some of her consulting clients on, how do you track, report, and communicate to your stakeholders the impacts that your social change programs that those funding partners are supporting are delivering. So Sure Impact is a vertical software that basically enables the more efficient tracking of the metrics underpinning these social programs and then reporting them, back to stakeholders. And that's really critical because for nonprofits, that's kind of feeds the virtuous cycle of you receive funding to execute these programs, you execute and implement, you need to report those positive impacts in a compelling way so that your funders will continue to support the good work you're doing. So it's pretty cool how Sure Impact, is enabling that, for that part of the economy.
Right. And you're investing on average about how much in each deal?
Sure. So our investment ranges from anywhere from $250,000 to a couple $1 million. Our average or kind of modal check size is more kind of in that $500,000 range. To $1 million, but probably $500,000 is probably across all of our stages of investment.
Do these startups that you invest in, do they also get space in your co-working facility there and your lab, or is there a cost involved? How does that work?
Sure. So it's a different part of the business. We always offer it up. We think there's a lot of really compelling reasons, for companies to have their office, in our innovation center, but it's not required. And companies are approaching kind of space and organizational design and how kind of facilities and, their work environment that they've designed as part of their business our portfolio companies are taking a wide variety of approaches to that. So we view our facility as providing, a mechanism that enables a variety of different approaches that kind of best suit, the company's needs.
Okay. So a question from Tulsa, actually. The question is, how much investment in entrepreneurs is happening organically versus through government, OSU, and foundations?
No, it's a great question. And I think, there is an important role for, state government to play. U.S. Treasury is doing the SSBCI program right now, which will flow through to the states and enable kind of additional programs. But, we think public and private partnership is really a key. It's really interesting. If you look at our 4 active funds, one of them actually has public state of Ohio support as part of the capital structure of that fund. The other 3 are, fully private funds. And, we're flexible in terms of our approach. And we think, there are opportunities for us to continue, to work with the state of Ohio's pre-seed capitalization program and things like that. But we also know that there could be, some strategies and opportunities for us to form and manage funds, outside of those programs with private partners. So we view it as a hybrid, flexible model, and really just trying to, optimize the design of our funds to meet the opportunity and strategy that we're seeking to execute, and just having a fairly flexible approach in that regard.
And then the LPs that are in your funds, are these private organizations? Are these public organizations? A mix of that? How does that work?
Yeah, it's a wide variety. So we have a large number of corporations that have partnered with us on our funds. Some in our broader funds that have multiple investors. We have certain funds that are kind of dedicated corporate venture or strategic based funds that we manage. And then our life science fund's an interesting example where we've partnered with the Ohio State University and Nationwide Children's Hospital to have a fund dedicated to life science investments targeted at spin-out companies, commercializing technologies developed at each of those institutions.
But this is a very different model that I found happening in the Midwest versus what I was more accustomed to in Silicon Valley of private and happening organically, as Peter said, from Tulsa. So I just wonder which in the long run will prove to be more effective.
Well, it's interesting. I think it's not one or the other. I think there'll be different, models that emerge. I think in multiple markets, really solving for, pre-seed capital formation, which is the riskiest capital, that is where, you could, I think, credibly and reasonably conclude that public support for capital formation at the pre-seed stage is pretty important. And we've seen that in Ohio in terms of when Ohio Third Frontier began the pre-seed capitalization program, it really did catalyze the formation of seed funds in the state. Some of those were, formed by organizations like Rev1 Ventures. Others were formed by, sponsors of angel funds coming together across the state. And what this really did was, developed a pre-seed investment kind of infrastructure across the state that I think in many ways was foundational for some of the success and growth that we're now seeing, play out today. Right. And again, I don't know if that would have been possible without, some early state support to provide, some additional incentives for the capital formation. Now, it's really important to note this was never a state solution. This was state support and enablement, but there was always a very substantial private capital component that needed to come together as well, to support the development of these early funds.
A matching investment.
Yes.
Right? Okay. And Ohio Third Frontier is a government program. It's backed by bonds, right?
Correct.
So the public is actually supporting it.
Yes.
It's a very unique program, I think. In other communities, you see foundations more actively involved or nonprofits more actively involved. The Ohio Third Frontier, there's another program too, Jobs Ohio, which I understand is funded through the profits from liquor sales.
Correct.
That's really wild.
Yeah, I think it's just the variety of different approaches that, can be taken, different sources of revenue, different programs that can be implemented. And I think that there is most certainly accountability for executing successfully on these programs reporting tangible impacts in terms of, what is the number of companies formed? What is the employment created by these startups that are created? What's the revenue generated and the tax base that results? What type of capital attraction can occur in the region to further support kind of the growth and success of these technology companies in the region? I think all that really does create a virtuous cycle that does have, a number of far-reaching benefits for communities.
Okay. And another question from our founder on board here with us, and he wants to know, can you talk a little bit more about the relationship with other VCs locally, such as Drive Capital, and do you help local startup founders with those introductions? Can you speak a little bit more about how that works?
Sure. Well, absolutely. Syndication is incredibly important to the work we do, networking with other investors, both to source deals for ourselves and also to help the companies that we're investing in raise capital to fill out rounds that we may be leading, or to access, follow-on financing rounds. Drive invested in our most recent fund, which was a really nice show of support from Drive for the work Rev1 is doing, and we're appreciative to have them as an LP in one of our funds. And yes, when we have opportunities and companies that that we think hit Drive's kind of strike zone, we certainly refer them to partners there with whom we have relationships. But we work a lot with a variety of different investors in Central Ohio, around the state, and around the Midwest. And, we're fortunate to, have that network, grow each year and bring new investors to the table. We've been pleased to see new funds form, in the region, or existing fund managers raise new and larger funds, because again, that's just providing, more capital in the region. And again, the nature of our work is much more collaborative than competitive in terms of really trying to get the right investors around the table that can best support a company and bring complementary, not just dollars to the table, but complementary networks that might extend to different regions in the state, corporate partners, different connections in the community that can be valuable as these companies, start to really take off and grow.
Right. It is growing, but it's still a very small piece of the pie overall, because the majority of the funding is still going to California, New York, and Boston, about 3/4 of it. That may have changed a little bit with remote working, but I think the Heartland states only get about 10% of the total funding. So do you see that could maybe double in a few years, or where do you see the trend line going?
Well, I do. I'm very bullish on Central Ohio and Ohio's opportunity for sure. I've certainly spent my career, here trying to do what I can to make that happen. And my colleagues and I, we're all really passionate about not only, hoping for that success, but working hard each day to, achieve that success. So, no, we certainly think there's going to be growth on the horizon, and, think it bodes well for everything going on here. Again, I think my earlier reference to, investors, actively calling on me and my colleagues so they can understand what deal flow looks like here, what types of companies are getting built, which companies should we be meeting with now? No, we know they're too small for us today, but we want to form those relationships and watch those teams execute so we can be ready to lead around in the future. I mean, I think that's just kind of the forward indicator, the leading indicator of a high degree of interest in investing in the region. More and more firms wanting to have scouts and eyes on the ground here and seeing what's happening, and forming relationships that will enable them to close more deals here. And what we're seeing too is, once a firm makes its first investment in Central Ohio, especially now post-COVID, they're actually coming to board meetings in Ohio. They're tacking on meetings on the front and back end of those visits for board meetings. And, they're calling me, they're calling other investors in the community. Hey, who should I be meeting with? I'm going to be here a day before, or a couple of days after the board meeting, help me pack my calendar. And, Rev1, and I know a number of firms in the area, and across the state are very eager to help set those meetings up, because, we want to attract those investors to build on their initial investment in the region and continuing to look for more opportunities here.
So you're sharing deal flow across regions, or is it mainly confined to your own region in Ohio, your own deal flow? Are you sharing that with across regions?
Well, from a syndication perspective, it's definitely cross-region. Certainly, we know best the companies in our own backyard. So that's just sort of where our strongest base of knowledge is. But certainly, if I'm an investor, in a Cleveland-based company, I'm up in Cleveland for a board meeting, I'm very happy to introduce them to, a Cleveland company, or same for a Cincinnati company. We're all very focused, obviously, on our own portfolio companies first and foremost, but, we're also, I think my disposition is trying to see, the tide rise, for the entire state, in region, because again, if investors are coming in, to Northeast Ohio, it's not a far drive down 71 to come spend a day in Columbus. And, we always encourage investors that are coming to Ohio to really check out, all the regions in the state.
Right. There needs to be more nonstop flights in and out of Columbus. I had to go through Dallas-Fort Worth last week, and it pretty much took me all day to go from Columbus back to San Francisco last week. But it was okay from New York to Columbus. That's easy. But then the second part of it was not so much fun. But anyhow, I know, second tier cities, Columbus really isn't even a second tier city anymore. It's pretty big, and population growth is like 15% over the last decade. So we need more nonstop flights into Columbus to get those people, so they can not just drive in, they can fly in as well. Because when I was on my Rust Belt road tour, I drove everywhere. A lot of Goodyear tires. Anyhow, and a lot of Kroger stops as well. But anyhow, what about diversity in the region? When I was growing up near Columbus, it wasn't very diverse actually. But now it really is a lot of people from all over the world. And how's that impacting your own investing approach?
Well, it's awesome. We're very excited to see it. And, we definitely are trying to do everything we can to promote broader, access and opportunity, across diverse entrepreneurs, women entrepreneurs, in terms of accessing capital. That's another area that venture has a tremendous amount of work to do to be where it ought to be, in
What
terms
about
of
Black entrepreneurs, Black founders?
absolutely.
Founders. Okay.
Yes.
India is really becoming very big. India, it's like now with the new prime minister and all that. But yeah, let you talk about that. Just go ahead. I'm sorry to interrupt.
Oh, no, not at all. So just to the point that it's, I think, an area that the industry absolutely needs to improve upon. I'm glad that we're talking about this more now, and definitely in the phase of now doing, more about it. Right. From Rev1's perspective, we're investing heavily in our DE&I programming. We have a mentorship program, focused on, providing, mentors, diverse mentors to startups. We have a DE&I grant-based program that's providing, some early non-dilutive funding to, Black and women founders, and we're excited to be, promoting and building that program out. We're partnering with organizations in the community to help make sure we're most effectively serving, Black and women entrepreneurs as well as we can, and that our approaches are accessible and successful and positive experiences for all different types of entrepreneurs with whom we work. We've looked internally and really made a concerted effort to, diversify the composition of our team. And we think that's very important, that our team reflects the diversity in the community, that we're part of. So it really is, it's not any one thing. I think it's a series of really intentional things that we're trying to do at Rev1, to make as positive an impact in improving this area as we can. And, it's going to be, I think, long-term work. And I don't think success will be measured in a day or a week, but, really over time, I think, we'll continue to see, more great women founders, more great Black founders get funding and build, really successful businesses here.
Yeah, I think some of these summits and festivals that are organized around like Black Venture Summit in Tulsa next week. And then there was this past summer, there was Cincy Black Tech Week. I may have the name of it wrong, but Cincinnati had its own Black Tech Festival. So does Columbus have something like that? Or what is something like that coming for Columbus? Or what are some of your main startup events there?
Yeah, I think there's a variety both on the event side and efforts there, but also on sort of just the pipeline of talent side. And again, that's probably an example I can maybe speak best to. As I mentioned earlier, our Color Coded Labs portfolio company, that's doing the coding boot camp, really targeted at, Black and women entrepreneurs, or I'm sorry, Black and women that want to develop their coding skills. So again, it starts I think with workforce development, talent, and then providing funding opportunities and services and support to help entrepreneurs stand up companies.
Sure. Okay. So what is the biggest startup event of the year in Columbus?
Oh boy, that's a great question. We've been able to do some really interesting events through Rev1. We had our block party earlier this summer. It was kind of our first post-pandemic event, and we had a number of startups, corporate partners, investors in the community join us for that. That was over at our innovation center. It was a really fun event outside in kind of our alleyway, and we were excited. That was like the first kind of major event we did post-pandemic. So we'll continue to do some things to kind of convene kind of our stakeholders to celebrate and network. And, it's nice to see more of those, events kind of happening in the community. But we have a lot of really interesting things happening in terms of, weekly tech meetups, that are trying to convene sort of corporate IT folks with the startup community. We had Code Launch, another organization, comes through about a month ago with its, kind of startup showcase and pitch event. So it's just exciting to see a number of these things, return kind of post-pandemic and, come through with now really strong, attendance and really great opportunities to go out and connect with folks.
Sure. Well, we're bringing Silicon Heartland series, not only online, but live in person. And the live in person part of it starts pretty soon. So we're hoping to add Columbus to that as well. I want to ask you before time runs out, there was some breaking news yesterday about Drive Capital and Mark Kovney stepping down or stepping away and becoming partner emeritus. Now, Mark was the co-founder. He's the one who led the vision for Drive Capital from the very beginning and had kind of the insight on that because of his work in job development for the state of Ohio. So what impact will his stepping away have on the startup ecosystem, particularly at a time when portfolio companies need all the help they can get to get through this tough economic period?
Sure. Well, Mark certainly had a huge positive impact through all his work here. And, he and Chris, partnering to found Drive, Chris Olson, that is.
Yes.
And, so it's just, I just want to say, it's a wonderful asset in the community to have Drive here. Any community, I think would be thrilled to have a firm of Drive stature and the partners that they have, at the firm. I mean, I think, Mark stepping back is, certainly a loss, but I think Drive is in wonderful shape just with Chris's leadership and all the great partners they have over there that'll continue on the great work of the firm.
Right. When they have a lot of capital under management now.
Yes.
For a Heartland VC, $2.1 billion now. It just seems like a lot for Chris to manage solo.
Well, I think they have some other, great partners there too. Andy Jenks, Nick Solaro, Molly. So they've got some great leaders over there as well that I think will be able to, support, Chris and continuing to lead that firm on to, continued great things. So.
Yeah, well, I know they've had a big impact in the region and have funded several successful companies, or at least they cashed out at the right time with those companies. Some of those companies didn't do so well later on after they went public, but that's another issue. Let me ask you about where you see startup activity going in Columbus. What are the sweet spots for Columbus? Is there anything like I always hear about health tech in Columbus and insurance tech for Columbus because of nationwide? Are those kind of the sweet spot for Columbus, or is there something else?
Well, I think those are definitely sweet spots, and those are areas in which we actively invest. But I'd also include life sciences in there. I am really excited about what's happening in life sciences in Central Ohio. And this is, really a testament to Nationwide Children's Hospital, the Ohio State University, and their investments and their research organizations, and, the caliber of scientists they've recruited, to their organizations, and the innovations being churned out. So, some of our, most successful investments over the last several years have been on the life sciences side, in gene therapy companies that have been developed at Nationwide Children's. And I think the exciting part of doing this kind of formative work is you really do start to see the virtuous cycle turn where, you have success, you attract capital, you attract strategic investment in the region. Strategic investment then comes in the region to develop a more substantial presence. We saw this with Sarepta Therapeutics, which acquired MyoNexus, which was a Nationwide Children's spinout, and Rev1 portfolio company. And now Sarepta has a nice office that they've developed over in the Easton area in Columbus. And, you have the founders of MyoNexus, working on kind of new things. And you're having now greater employment come to staff, Sarepta's operation. And that will create more talent in the region, which creates more talent then that, could join startup companies. So you have this, I think, really great life science, industry developing in Central Ohio. And I think that just bodes well for an acceleration, of that activity. And we're really excited. We're going to continue that work. We're seeing other investors, take greater interest and start to invest in life sciences in the region as well. So just a number of positive things happening there that I think bode well for life sciences as being another pillar of kind of our startup, environment here in Columbus.
Sure. And Columbus never really got stuck in this whole Rust Belt meltdown because it's always been a government town. It's a Central Ohio, it's the capital of Ohio. It's always had this huge service sector. So it never had the Rust meltdown. So it's easier to grow up from that. And, it's interesting because I have this China experience too, and I've covered Asia a lot. So I can see the contrast and similarities between Asia region and now the Heartland. And I write a bit about that in my new book. So I won't go into all the detail about it, but I think it is happening in the Heartland. It's a little slower. I think we saw a terrific boom in China, and we haven't quite seen that boom yet in the Heartland. So we're still waiting on that, or we're poised for that. Maybe it's a better way to say it. But we are seeing a lot of positive trends like serial entrepreneurs and heroes and startups going public and acquisitions happening and more funding coming in. So those are all positives for the region, which is why I wrote the book, Silicon Heartland, to highlight it. Okay, let me just say a few more words before we wrap things up. And I want to share a little bit more about what we have coming up, because there were a lot of other questions about what's happening in the region. And so we are moving to other regions. We are going next to Tulsa. That's next week. And they're going to be doing an interview with Michael Bash of Atento Capital in Tulsa, and actually right in Tulsa. So that's going to be fun. And I'm going there for the Black Ventures Summit to participate in that as well, learn about Tulsa's ecosystem. And then after that, I didn't get time to ask you too much about Appalachia and like southeastern Ohio in your portfolio mix, but it was interesting to see this kind of new frontier developing in Appalachia as well. So we have coming on Mike Green from Mountain State Capital from Morgantown, West Virginia. It's another university town, University of West Virginia. He's on November 16th. And then from Cincinnati, we have Pete Blackshaw from Centrifuge, and he's on December 14th. I also mentioned our in-person events. These are where you'll get to see a preview of my new book. You'll actually get a copy of it. These are happening in San Francisco, November 9th, and in New York City, December 8th. If you've already joined our Silicon Dragon Circle, you will get an invitation to it, and you probably already have received an invitation to the San Francisco one. So that's a little bit about what we have coming up, and I hope that you enjoyed the show, and I hope that you'll give a round of applause to Ryan. Everybody, a round of applause to Ryan. Thank you, Ryan. Really appreciate your remarks, your expertise in moving Columbus forward and the whole Central Ohio region forward. Is there anything else you would like to add?
No, I think we covered it. Thank you so much for having me on. I enjoyed the conversation.
Okay, we enjoyed it too. Thank you. And actually, we'll be posting this on our YouTube channel, so stay tuned for that. Thank you again. Take care. Bye-bye.